Testing 1 2 3 1 2 3. Good morning and welcome to the Financial Juice live morning briefing with your host, Tony. So, what I wanted to start off the day with, first bit of news, we take a look at this article from Reuters, just talking about UK stocks rally, halts as insurers and Tesco take hit. So, Britain's FTSE 100 lost steam today as rising global deaths doused hopes that the coronavirus crisis was abating, whilst insurers took hit over halts in dividend payments, and Tesco, ticker TSCO, warned of a surge in cost. Both EU and British regulators had urged restraint on dividend payments and payment of bonuses as a buffer against potential losses from the pandemic. So this is something that was discussed by EU countries, that they would halt dividend payments, which of course is going to take a hit. So for the FTSE 100, what happened here is that it fell by 1.8% after closing at a near 2-week high on Tuesday, and it's still up 3.6% for the week. So here is the conundrum though that we currently have at the moment, is that if you close down or lock down your country and businesses are not able to make as much profit as they were able to because of taking on extra costs, that's one key thing that is going to have an effect on the shares of those sort of companies. So such as Tesco within the UK, if we just take a little look at Tesco's themselves. So Tesco's, what happened is that with the increased amount of money they're spending on staff and bringing in more goods and increasing their services, that's taking a hit on Tesco's as a whole, share-wise. And you'll see that across other, not only within the UK, but also Europe-wide as well. Other big service providers or goods producers, they're going to take this hit as they're having to spend more money to keep operations running at a steady level. And if there are more stringent and aggressive measures taken, then that does have an effect. So if we just take a look at the charts for the FTSE 100, I'll bring that up for you to look at with me as well. So here we go. So this is from yesterday, as we can see, before the EU session closed. We can see that for the UK FTSE 100, this is the movement that we had seen towards the downside. We can see that's quite a significant amount. So we are up a little bit by 0.21% at the moment. But if we take a look at the overall movement here of what we've seen, so currently this is where we sit. So we got to our really low point So we dropped by over nearly 3.5% on the UK FTSE 100. So that's the reaction that we've seen from the FTSE, as companies, one of the biggest companies in the FTSE 100, Tesco's, as the ticker TSCO, warned of a surge in costs, and that's going to likely continue until the lockdown measures are removed and businesses are able to take that heat off that they're currently feeling right now. Okay, if we go back to some other bits of news as well. All right, so from BBC article, US records highest death toll in a single day. The US recorded the most coronavirus deaths in a single day, with more than 1,800 fatalities reported yesterday. So if we just have a look at this time frame or this chart from the Financial Times, I'll just bring that up for you guys to have a look at as well with me. So this is what we see at the moment. So in the UK, so in the US, that's still continuing to see an increase in the amount of coronavirus cases and also in the amount of deaths as well. Now, if we just have a look at the rest of the world, so here we go. We have a nice little curve on Spain at the moment. So they're showing that their lockdown measures are working, and the number of coronavirus deaths, it basically reached its plateau around here, and we're going to see, and it's likely a continuation of this downward movement, you could say, in the number of coronavirus cases in Europe. So we can, of course, Italy being the epicenter, still higher. It was higher than the rest of the EU and the rest of the world, but now they're showing a bit of a plateau as well. China is showing a little bit of a resurgence now. You've got to remember, so last night, while we were reporting on this, we had China's Wuhan that opened up its borders again, and a load of people rushed to get out of Wuhan and get out of Wuhan, China. And this is it's a positive sign that things are getting back to normal. It's very, very slowly in China, particularly in the epicenter of Wuhan. But if people are rushing out to get out of Wuhan, kind of presents a negative image or a negative part of this narrative that we're in the coronavirus narrative. The reason being is that these people that have been stuck in, there may be a potential second rebound of cases, and that's what we can kind of see here on this little graph here, that we've seen a little bit of a rebound in the number of cases, but not too significant. Things are still under control at this time, so it is likely that we will see a phase 2 of the number of coronavirus cases picking up in China, but not as significant as it was compared to the peak. Now, that is as more people become immune to coronavirus as a disease, and measures, and we see a slow drop off in the number of people contracting the coronavirus, then it's going to be a positive thing. But for the US being the largest GDP, the largest economy in the world, their recovery time period is going to look a lot worse. I mean, here, okay, China takes draconic extreme action to keep everyone locked down. The US hasn't done that. That's the issue. And we're going to see the effects of coronavirus on the US's economy for quite a bit of time. You've also got to remember, we did have some Fed talk. So Bernanke, who spoke yesterday, and we spoke about some of his headlines, saying that the impact of coronavirus could have a permanent effect in some way on the US's economy as a whole. So that's just to keep that in the back of your mind as to what we can see, or what we're going to see within the US. Figures are going to get worse for US economic releases. NFP, initial jobless claims, that's going to be that's going to take a hard hit. So don't expect US figures to suddenly rebound and get better. Now, if we take a look at the ES, I'll just bring up the chart for you, and just an overview of what we've seen so far. So this is what we see. So this is around the 19th of February, we had the coronavirus being declared as a pandemic. And then we've seen this continual downward movement towards the downside, with strong selling happening here on the ES futures. And then here at the bottom, around on the 23rd of March, we had some big guns being pulled out from the Federal Reserve, of providing a lot of money to, first of all, not only to the markets, but also cutting their rates to nearly zero, right? That's a key thing just to keep in the back of your mind, that going to nearly zero at 0.25% or 25 basis points. Is it enough? Well, to the markets at the moment, what it looks like is, yeah, it was enough. But then that kind of peeled back a little bit, and sentiment was going to turn negative. But then you have Congress passing their $2 trillion stimulus bill after a little bit of backwards and forwards fighting going on between the Republicans and the Democrats. And then you've seen this continuation of a movement back towards the upside. Now, yesterday, what I did mention in the morning briefing is that we have broken below this trend line. I'll just put it on a higher time frame. We have broken below this trend line that we've seen for US futures. Now, just keep that in the back of your mind, that at some point, well, this is what we would call a bear market rally. Okay, so we would see new lower highs being created. So at some point, eventually, we'll probably get up at around possibly around this area here, of where we can see where we get to 3,124, and then a continuation of this bear market rally where we see US futures move back towards the downside, and then there we go. Then we continue our bear market rally, and where US futures can get really, really low. Potentially, this is what we can see. So we did hit, if this is our low so far after this huge rally that we've seen for a very, very long time, since 2008 and 9, then the market effect of the economy being shut down, if that ever happens, or these companies are having to battle the number of the workforce being depleted, as we've seen from initial jobless claims and also from NFP figures, then you're going to see continuation of this bear market that we can see. And it's just a matter of time of when that's going to happen. So potentially we could get to this level around here first, just to see. That's our level, that's our testing level at the moment here. We've got a long way to reach that level of resistance at 2,800 or nearly 2,900, you could say, just to keep it simple. And then from there, that's where we're going to see a bit more resistance coming in, and the level of resistance kind of just this is just an overview, right? This is what you've got to keep in the back of your mind. Then potentially we could see this, so if I do draw like a little line, so we could hit this level here, kind of trade around here, trying to keep a little bit of a hold, maybe a little bit higher. This level here might be a bit of a push. And then what I'm expecting, or potentially what I'm expecting to see, is the movement back towards the downside, and then past this level of support, and maybe we'll hang around here for a little bit. And then what will happen is then we'll continue our downward trend in US futures. So this is going to be a big hit. That's something that you can't miss. You can't say, oh yeah, we're fully recovered. No, don't think like that. I mean, you can, to be optimistic, At some point, yes, we will recover. But for now, for the next month or so, maybe even a couple of months, we're not going to see any really, really positive figures or positive trading going on in US futures. Now, going back to our articles, so let's have a look. So, OPEC plus plus. Don't forget they have their meeting tomorrow at around 4 p.m. Eastern time or Vienna time. And then what we're going to, so 4 p.m. Eastern time, what we're going to see, of course, at the moment, if I just bring up WTI crude oil for you guys to look at as well, where we sit. So this is what we currently see in WTI crude oil. I'll just hide the Dixie. Actually, I'll leave it up. This is where we sit on US futures at the moment. So I'll bring it up on a higher time frame. So markets, we did see the initial rally off of Trump's comments, but now we're not going to. Now we're seeing a movement back towards the downside. So we're seeing a bit of a hiccup in WTI crude oil. If I just actually, I'll hide that because that's a bit hard to see. There we go. That's a bit better. There we go. So we're seeing a continual downward movement in WTI crude oil. It is holding its level here at around $23, but we are kind of, so this is our little level of support on an intraday chart here. But then again, don't forget this bit of resistance that we have. Now, if I bring up on a higher time frame, and we'll see what we're looking at there. So that's a bit of resistance that we have. So going back to our 2016 lows is what we can see for our level of resistance. Again, selling still quite strong, even though there's a little bit of a rebound. We'll wait to see what happens when we actually come out of this OPEC meeting. Now, going back to the article, if we just bring that up. So, oil faces a critical week as Saudi Arabia, Russia, and other global producers work frantically to secure not only, well, the meeting has been secured, but now to secure the cuts. So who are the key players in this OPEC meeting? Oh, and also who are the key players who are non-OPEC members, right? So Friday, you have the G20 energy ministers meeting up to discuss potential cuts. So Saudi Arabia currently producing 12 million barrels per day. That's from April's data. Now from here, Saudi Arabia is delaying the release of its closely watched monthly oil pricing list until later this week, as the kingdom awaits signs of what may happen when suppliers meet. So the state-run Saudi Aramco said it would keep flooding markets with historic levels of oil at least through May as it fights for market share following the breakup of the OPEC Plus alliance. So remember, OPEC Plus means OPEC plus Russia. They didn't formally agree to be part of OPEC as a whole, otherwise you wouldn't get the plus. So here we go. So OPEC, so Russia, Saudi Arabia, they're producing 12 million barrels a day. If we look at Russia, where they said they're producing about 11 million barrels per day. So Russia would target a 1 million barrel a day cut in any new deal with other key oil producers on the condition that the US joins the cuts, according to 4 people familiar with the sentiment in the industry. Putin said a cut in global oil production of about 10 million barrels per day is possible, and the nation is ready to participate on a partnership basis. But Russia won't agree to take more than a tenth of the global cuts, according to one of the people who spoke on condition of anonymity. Now, as I said, Russia, yes, they would look to work together with OPEC and also non-OPEC countries, but they're looking for the US to come along and work with OPEC as well, and other non-OPEC countries, including itself. That, as I said, we reported yesterday that Trump was not looking to be bullied or pushed around by OPEC and saying that it's their issue. But we got some positive news that the Energy Secretary for the US, Brulette, would be part of the G20 virtual meeting Friday, and then so that's a key positive sign from the US's side, but no mention of any further comments of any cuts from the US's side. What else they would do to keep the market afloat. We did have some comments as well from Trump this week saying that they would look to cut domestically, but no actual figures from Trump were given. Is more relying on Russia and Saudi Arabia to form the major part of that 10 million barrel a day cut. Now, as I said here, so if we're looking at this article, so Trump sent shockwaves last week saying that he'd brokered a deal with Saudi Arabia and Russia to cut 10 million to 15 million barrels. This is why, as I said, we saw prices, WTI crude oil prices. If I just bring up the chart again, and we can see what we're dealing with when we're looking at the push that we had. So if we bring that back up here. So WTI crude oil, here we go. Here's Trump's little comment, well, big comment, should I say, and where we saw US crude futures rally. If we just look at this percentage-wise, over nearly 25% of a rally right there, just from Trump's comments, right? Of just saying, oh yes, I've brokered a deal with Russia and Saudi Arabia to cut output by 10 million barrels or to 15 million barrels per day. And this is where the market sentiment continued to move towards the upside. And then again, it broke. It decided to pair. Now we're nearly cutting our gains here that we're currently seeing. We'll potentially see WTI crude oil move back towards the downside for the foreseeable time until OPEC decides to say, hey, all right, we're going to agree to a cut. And Friday, non-OPEC countries also agree to a cut as well. If we take a look at another article, so if we go back to the USA and just see where they sit at the moment. Now for coronavirus, now from the Politico article called The Reasons Why the US Isn't on Track to Open Up. So one is lifting the social distancing measures will require extensive contact tracing, and health experts say that implementing widespread testing, curtailing the growth of new infections, and ensuring adequate healthcare capacity are all necessary before the US can think about easing social distancing. So we had Trump saying that the US administration is doing 700,000 tests per week, but you've got to remember there's 300 million people, over 330 million people within the US that need to be tested. So that's quite a bit of time to do a lot of testing. What health officials are saying in the US is there needs to be more aggressive testing. Just like in Germany, they did a countrywide test of everyone rapidly. And that's how they were able to curtail the number of coronavirus cases and also the mortality rate within Germany so quickly, is because they were able to just test everyone very quickly. Now, if we're just having a look at this, if the US, so we had Kudlow speaking yesterday in the morning or midday, talking about the US opening up the economy in 4 to 8 weeks. So we're looking at May, June is what we're looking at for the US. Now, if they're planning to do that and they're not talking about taking action to curtail the number of coronavirus cases and try to reopen the economy in certain areas, that's a negative thing. You're going to expect coronavirus cases to continue to skyrocket as they have. The USA is not learning its lesson compared to what Europe and China have done. If you go into lockdown, first of all, you put less pressure on your health service, and those And also those people who, those doctors who don't, or nurses that don't have the correct protective equipment or enough protective equipment, you're going to see a negative effect. So not only are we going to have a negative effect from US economic figures and releases such as NFP and initial jobless claims, but you're also going to have a negative effect in the number of increase in cases that we have. So I did kind of discuss this yesterday. The US's recovery path is not going to be beautiful. It's going to look horrible unless the US administration takes aggressive action to test as many people as they can or nationwide and continue to increase those, provide enough protective equipment, and stop providing hydroxychloroquine, which has been debunked by top NIH official Dr. Fauci, saying that it has no experience or evidence of it working. So stop doing that. Start working on give labs more money to search other drugs, right? Not try to throw out hydroxychloroquine. Anyway, so if we go back to the charts as well, we'll just have a final look as to what we're looking at. So the Dixie, if I just bring that up for you guys as well. Okay. So this is what we see at the moment. So the Dixie has been continuing to move towards the downside. We can see a continuation of this weakness in the dollar as people move to the Japanese yen as a safe haven. If the US economy is not going to do well, people are jumping on to other safe haven currencies, as I said, to the Japanese yen. Just to make it easier, we'll look at USD JPY, and so I'm sure you've already seen yourself as well, just to see the sort of reaction that we're currently seeing in the markets. So here, again, Japanese yen is appreciating in value as the dollar is losing its safe haven currency, even though you do have other currencies or other assets such as US securities, which has seen an appreciation in price. So bond prices have skyrocketed as well. That's also increased. But you've also seen other currencies appreciate against the dollar. That's just the case that we see. Okay, thank you very much for listening to the live morning briefing. Do keep in mind that we are in a bear market rally. Again, looking at the dollar and where we sit on the Dixie. So we've created a new lower high, which isn't a positive sign. So potentially we're going to see a continuation of movement towards the downside in the dollar. That's a potential. Okay, stay safe out there. Be careful when trading. Volatility is down. However, we are sitting at around. If we just bring that up here, we are sitting around at around 40 on the VIX. Yeah, so around 46 is where we currently sit on the VIX at the moment. But again, just be careful of the bear market rally that we see in US futures right here. Okay, thank you very much. Take care. Stay safe.